Hello, this is Nataraja. Welcome to a special mutual fund report. This is a detailed analysis of debt funds as on October 25th, 2024, that is last Friday. This is being done after 2 months. This is more of an academic exercise for me because I don't really invest in debt funds, but I want to keep in touch with what's happening in all aspects of mutual funds. So at the current rate, I'm doing this once in 2 months. Uh, and I'm also curious as to how the 50 basis points interest rate reduction has impacted the debt fund scenario since that has been done somewhere in the mid of September. So let us get on with the presentation. So before we get into this, since the debt funds are a bit rare to engage, I want to refresh the definitions. Liquid funds are ideal for short-term investments with high liquidity. Typically, portfolio maturity is less than 91 days. Okay. Then income funds. There are three types of income funds: ultra short-term funds, and long-term funds. People go for this for regular income. It's a combination of government and corporate securities. The ultra short-term funds are typically with maturity of less than a year. Short terms are 1 year to 3 years. Long terms are between 3 to 10 years. Yield funds, these are government securities. They are considered of low risk because government does not, bail out on its own commitments. Maturity is typically between 3 to 20 years, and the risk is less. That's why people go for that. Dynamic bond funds, these are the dynamic in nature because they adapt to the changing market conditions depending on how the interest rate keeps changing. So they are supposed to give you a reasonable return no matter what happens in the market because the fund managers adjust their strategy according to that. Fixed maturity plans have a fixed, you know, a maturity date. They are closed-ended funds. Okay, so there is a clear investment horizon and it's passively managed. These are considered better alternative for FDs. Typically, they are over 3 years. Target maturity funds are slightly different from fixed maturity funds. The key difference is target maturity funds are open-ended, whereas fixed maturity funds are closed-ended. Maturity period, fixed maturity funds have a predefined maturity period that can range from 30 days to 5 years, while target maturity funds can have maturity period from 1 to 15 years. Okay, so target maturity funds are typically long-term schemes compared to FMPs or short-term. Corporate bond funds, these are pertaining to high returns, but other than government securities, primarily linked to corporate. Floating rate funds are those which reflect the return according to the current interest rates. For India, it's based on linked to Mumbai Interbank Offer Rate called MIBOR. Then overnight funds, which happens for the transfers that happen between the banks, it is a maturity rate of one day, so return will be a bit less. Low duration, so people park funds in such things for a very short term. Low duration funds are better than overnight funds, around 6 months to 1 year maturity. Short duration funds, investment horizon of 1 to 3 years. Money market funds correspond to money market investments. They are also short term assets with maturity within 1 year. Credit risk funds are interesting ones because a minimum of 65% of the total assets is kept in corporate bonds with rating AA and below. So they're having higher risk, therefore higher interest rate. So here the economic scale can work better because even if you have one or two defaults in certain bonds at the mutual fund level, that loss can be returned against the higher interest rate coming from high risk funds. So credit risk funds tend to do well in certain business conditions. Banking and PSU funds like gilt funds, these belong to 80% of the asset goes to debt instruments from banks, PSU, and public financial institutions, reasonably safe. Other funds, typically in India, other funds are basically US Treasury based funds. So that is the definition. Now we are coming to the overall summary. The debt fund summary as on October 20. Okay, this is actually old one, sorry. I have old one, so I need to fix this and come back to you. So, okay, I am back. There was no error in the data except my legend was wrong because I recreated the new file using the old file and forgot to change the timestamp. So should avoid any confusion, so I corrected it. So basically here we are looking at the summary of various type of debt funds. Before that, let us look at the overall debt funds average, 492 funds. 1 week return 0.06, 1 month return 0.42, 3 months return 2.14%, 6 months 4.58, 1 year return 8.78. So that is kind of a standard debt funds return. Then I have the returns of all 20 funds. They are actually arranged in the ranking of overall returns across different timelines. I will explain that a bit more in detail. Their returns for various timelines is given. If the return is above the overall 492 funds average, then it's marked in green. If it is less than that, it is marked in red. So you can get a sense of how these type of debt funds have performed across various timelines. So typically you'll see more green on the top and less green in below. Then how did I arrive at the debt funds performance ranking? I have sorted these debt funds based on their performance by each timeline, and I have assigned ranking. And in every sort, I change the sort base to a different timeline return. So with that, I have got return 1 to 19 ranking for various timelines because there are 19 types of debt funds. Then I took an average of all these rankings to come up with the average ranking, then rearrange by ascending order of that overall ranking. That gives me the top ranked fund at the top. So here credit risk funds are the top ranked. And so like that, I have assigned all the ranking. The lowest ranking is other funds, which is US based debt funds. So that is in the last. So I'm going to discuss these debt funds in this order of ranking. So the top ranked funds are going to be discussed. Let us highlight some changes since the last report. Last report was done as on August 24th or so, or 25th, depending on whichever is the Friday. The data I get is from 1 day later from Value Research, because I should wait for the batch run through the night for all mutual fund data to be updated. So Saturday morning, which is the next date only, will be the date time on Value Research data. So credit risk funds improved their ranking this time by 9 ranks. From 10th rank last time, they have come to 1. And other significant improvement is medium duration funds improved their ranking by 6, rank 3 this time. Last time it used to be 9. Another improvement ranking is ultra short duration funds, ranking 12th this time, 16th last time. Another one is fixed maturity funds, ranked 14, last time it is 18. And the worst ranking slippage is the last one, the other funds, ranking slippage by 15. It used to be 4 last time, it's 19th now. Okay, this we can anticipate because others is basically US funds based, and there was a 50 basis point correction, and as the result the sentiments have gone down and the returns have gone down. So you can see there is a significant correction as a result in the performance. In fact, US based funds have given lower return than the overnight funds in India. Overnight funds gave 6.73, this is 6.43 annually. So that the things happen in bond funds depending on the international dynamics. I have given comparison between the two tables, the table last time, summary table last time and this time. I want to highlight first the changes on the overall funds level. 1 year return 8.78. Last time it was 8.16. So the fund returns have improved. 6 months is 4.58. Last time it was 4.17. 3 months return 2.14. Last time it was 2.28. So last time was better. 1 month return 0.42. Last time it was 0.88 because more volatility now. Short term returns are low. 0.06 now. Last time 0.2. So you can see the divergence. The longer term returns are better, short term returns are lower this time. Then if you look at, there is no need to discuss, except what I see here is long duration funds have an annual average of 13.10 this time. Last time they are 11.07, so they are looking good. Then I see more funds above average 10 here this time, which are dynamic bond funds, gilt funds, gilt with 10-year constant duration. So these are all above 10 additionally. Last time we had only one above 10%, which was long duration funds. So that's the key distinction I wanted to bring through this. Now we are going to discuss various type of funds in summary manner. If the total funds are less than 50, I will show them all. And if they're more than 50, I show only top 50. And the rules for green and amber are same. Within the list, if all the return across all timelines are above average, that fund is shown as green. If the return is slipping only in one timeline, then it is amber. For amber, one relaxation for short term is if either the weekly or monthly return is above average, then both are considered above average for computing the amber color. So here credit risk funds, they have given overall 9.06%. Short-term returns are also positive. And the top rated credit risk fund is Aditya Birla Sun Life Credit Risk Fund with the highest annual return of 13.11. Next, we are going to long duration funds. They have a good return, overall 13.10, none in green. The top annual return is by HDFC long duration debt fund, but short term they are bit negative in returns. Dynamic bond funds, 30 total, average return 10.23 is impressive. So the dynamic bond funds are able to maintain their consistency of returns. Here, the topmost annual return came from DSP Strategic Bond Fund at 11.94, and none are in green. There are many in amber. Medium duration funds, average return is 9.3. There are 22 funds. The best one, Aditya Birla Sun Life Medium Term Plan, 11.69, and in green. Kotak Medium Fund, 11.2 and green. Floater funds typically reflect the current interest rate, 8.75 average. The top return is by Axis Floater Fund at 10.62. So they had done some gimmicks with some minority fund portion, I guess. So next one is DSP Floater Fund 9.82, and short term most of them are positive, some are negative. Gilt funds, they are government securities. 10.64 is very impressive. These are typically long term based. The highest return, annual return, is DSP Gilt Fund at 12.48, and short term they are all showing negative returns. Sorry, there is one more Bandhan Government Securities Fund, but not getting any color, but at 13.31, simply because this fund has below average return for the weekly, monthly, and 3 months basis. Next is corporate bonds, 8.69, much lesser than gilt funds. And the best ones are the greens, HDFC Corporate Bond Fund, Baroda BNP Paribas Corporate Bond Fund, Tata Corporate Bond Fund. Highest is 9.21 annual return by Baroda BNP Paribas Corporate Bond Fund. They're all positive for the short term. Next one is gilt with 10-year constant duration. 10.50 is the overall return. The best ones are Bandhan Government Securities Fund Constant Maturity Plan, SBI Magnum Constant Maturity Fund. Both are above. 10 and the best is 11.2 by Bandhan Government Securities Fund. Next comes medium to long duration, overall return 9.97 and none are in green. The one that are in yellow are above 10% return. LICMF medium to long duration fund, Aditya Birla Sun Life Income Fund, HDFC Income Fund and Kotak Bond Fund. This is target maturity funds. Since there are more than 50 funds, only top 50 are shown. Average is 8.99. The one in green and having above 10% annual return, Bharat Bond ETF FO April 2033, 2032, April Bond ETF April 2032, then Bharat Bond ETF April 2031, 33. So that is the nature of that. Next is low duration funds, lower return 7.91 overall, and the one in green with above 8, Kotak low duration fund, Standard Plan, HDFC low duration fund, Aditya Birla Sun Life low duration fund, ICICI Prudential Savings Fund. Next is ultra short duration 7.62 and many are in green. The top two are the Aditya Birla Sun Life Savings Fund, Nippon India Ultra Short Duration Fund. Banking and PSU overall is 8.5% return. The one in green are Baroda, BNP Paribas Banking and PSU Bond Fund, UNESCO India Banking and PSU Fund, HDFC Banking and PSU Debt Fund, above 8%. Fixed maturity funds, there are more than 50 funds. Typical returns are anywhere between 8 and 9. Kotak FMP Series 308, Nippon India Fixed Horizon Fund XLV, Trust MF Fixed Maturity Plan Series 2, Nippon India Fixed Horizon Fund XL3. Okay, I don't want to spend time on what it is. Nippon India Fixed Horizon Fund again. So all these around 8 to 9%. These are the ones I read are in green. Money market funds, there are 23, average is 7.67 and typically the averages are below 8 and many are in green. Short duration funds, average return 8.62 annually, some are in green, somewhere in between 8 to 9% return. And liquid funds are short term 7.32% return. It's similar to many banks offer you FD. Sorry, not a savings bank, they give you more than 7%. So similar effect. Now the banks are giving you 7% if you have minimum maintenance in your savings account. So some comparable to that. Many are in green, most are above 7, close to 7.5 on average. Overnight funds, they are less than 7, but 6.73 for overnight is impressive. There are many one. Quant overnight fund gives you 7.13 fund, highest. So there are 36 such funds. Last one is others, which are all mostly US treasury based funds. Okay, and their return is 6.43. Only one is having annual return. The other ones are reasonably new ones. And negative returns for the short term and the lowest return in across all 19 different fund types within debt funds. So that is the lay of the land for debt funds as of now. Standard disclaimer, this is neither a recommendation or a solicitation to invest in any mutual funds. So thank you very much. You can follow me on my blog, which is Nats Fund Corner on Blogger, or catch up with the videos of the same blog contents available in various platforms of social network pertaining to me. So with that, we are coming to end of this bulletin. Probably I will take another 2 months to discuss bond funds performance in detail. So until then, see you. Have a good one. Thank you.